Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on probability of profit versus probability of touch. I'm going to show it to you using the Thinkorswim platform. You want to make sure you check with your broker, see if they have these features to add into your platform when trading options, and they might call it something different. So I'm going to show it to you using Thinkorswim, but just check with your broker first. So what I'm going to do is I'm going to show you it using probability of in the money. So this is with an options contract expiring in the money at expiration, right? So probability of in the money is the odds that the stock that you've entered into an options contract with trades above or below, depending on what strategy you're doing, your strike price, and stays above that level until expiration. So it's in the money. This is going to be your win-loss chance, so the percentage that you will win or lose on that trade. Again, I'm going to show it to you what it looks like in a real-world example. So again, probability of in the money is the odds that it expires at expiration above or below your strike price. Now, probability of touch is the odds that the stock that you've entered an options contract into trades up to or down to your strike price before expiration, but doesn't expire at that same level. All right. So a stock can drop down or go up to that level and then retreat. So it can happen just once, touch it and then retreat, and then it won't expire above or below those levels, right? So probability of touch is different than in the money, or probability of in the money at expiration. So in the money's at expiration, your win-loss percentage, and probability of touch is the probability that it can touch your strike price, move up or down to it at some point, even just once before expiration. So touch, when this happens, can show a loss, but it won't stay a loss. Right? So that's where you're going to determine whether you're going to stay in the trade or get out of it. And that's why a lot of options contracts and trading options, for people can be very frustrating, because they could take a loss a lot of times when they could have stayed in the trade. So a lot of times it might reverse, go down, hit their strike, and then bounce up the other way. They decided to close out their trade, took a losing trade, but then it ended up being a winning trade. So that's why probability of touch can allow you to stay in the trade and not get shook out. So it's good to know both the probability of touch and then probability of in the money on the trade, so you can tailor your strategy and not get shook out a lot of times if it reverses or comes down at one point. That's where a lot of new traders can get shook out of their options contract. So you'll see here I entered into a credit spread for Netflix. So this is a put credit spread. So I believe that the price of Netflix is going to go up. So you'll see right over here, I have probability of in the money. So if I was a buyer, you'll see these are the columns that right here, probability of in the money, both on the put side and on the call side. This is the probability that Netflix will expire in the money at expiration. So these, as you can see, the deeper in the money, like on the call side that you go, the deeper in the money you go, the odds that it expires in the money at expiration are much higher. That's why you'll pay much higher for the options contract. And then you'll look on the other side, probability of in the money on the put side, the higher the price goes, the more you're going to pay, because, obviously within 2 weeks, let's say, or 11 days, the odds of Netflix going from $530 up to $770 are not very high. But then the odds of Netflix staying, dropping down to $275 are not very high. That's why you'll see, the probability of in the money percentage is way higher, way down here and way above out over here. So when you're building your credit spread strategy or just trading options contracts in general, again, you want to be very careful trading, naked options. But if you go over here, if you were to buy just a naked call, the more in the money that you go on the trade, the higher odds of your success. Obviously, you'll pay more for that options contract. So the deeper in the money, the higher your probability of in the money at expiration. You know, on the flip side, again, the higher that you go, you'll see in the money, the higher that your percentages, right over here, the higher your percentages go, and that's why you pay more money. So then when you start doing, you know, things like credit spreads, if you're being an options seller, then you would look more at these levels right here, because then probability of in the money, you want as an option seller, if you're doing credit spreads, you want the option to expire out of the money. So basically out of the money, so probability out of the money would just be the inverse over here. So it would be, there's a 75% chance right here that that Netflix will expire out of the money. So when I'm doing a credit spread, I just kind of flip this upside down, right? So for this video, I just put in probability of out of the money here so you can see, you know, for buying strategies. But again, you just flip the number upside down, right? So if this said probability out of the money 20 or 20, what was it, 75%, then in the money would be 25%, right? So I show you this area because these areas of in the money, if you're a buyer, you know, the higher of your probability of in the money, the better success that you are going to have on the trade as a buyer. You just flip it as a seller when doing selling strategies, right? So that's where, again, if you're doing selling strategy, you could just flip this number or change this from probability of in the money to probability of out of the money. So this is a great way, having this probability of in the money or out of the money, which one you prefer, can show you how to build high probability trades. And then obviously taking profits earlier in the trade before expiration. Now this is, again, this is going all the way to expiration. If you take profits before expiration, you could increase this number. It's kind of a hidden number. There's not an exact number, but your odds of success on the trade might go up from 75% to 80, 85, 90%, depending when you're taking profits on the trade. So this is, again, only if you hold completely to expiration. Now, something to be very aware of, again, is this probability of touch. If you look over here, I have a 75%, you know, on this credit spread, I have a 75% chance that this is going to expire out of the money by expiration. But there's almost a 50% chance, a 49 point something percent chance that at some point Netflix will come down and touch $500 before this expiration date. So this is where a lot of times options traders can get shook out of their trade, so they could end up with a winning trade at expiration, but it could fall down and touch their strike price and shake them out. So this is where, again, having good risk management's key. You don't want to like let things blow past your strike, or you want to be careful, right? You know, sometimes you have to cut your losses. That's where it's important. And again, you know, be very careful putting stop losses into the system with an options trade. But if you have to at times, you can't look, you know, then you can put an order in the system for a stop. But don't get in a habit of always putting a stop in your system, because it can trigger, you know, at any time. So it's important to know, again, both of these levels. You can build your high probability trades by using probability of in the money or out of the money, depending on what you do. Sometimes when I do credit spreads a lot, I just like to have out of the money. So I'll flip this to out of the money just so I can see, again, if I'm going more of as an option, you know, seller, then I just look at this number more. But I could just easily flip it. It's just a matter of your preference. But as a buyer, you put the in the money, and it just shows you, again, the deeper in the money you go, the higher you go, you will pay, because the odds are in your favor, right, on both the call and the put side. But just, again, be aware that you'll see these the probability of touch numbers are different than the probability of in the money, because it's the percentage chance that it can touch just at some point by expiration. So again, managing your risk is extremely important with any type of trading, especially with trading options. But also be careful, you know, sometimes if price goes down to your level, you don't always need to get shook out. Sometimes, again, that's just natural price movement up and down within a stock. So if you're new to the world of options trading, we do have a couple free options courses that you can take over on our website at bullishbears.com. The link will be below. We also have trade rooms where we do all different types of trading. We do penny stocks, regular, large cap stocks, swing trading, futures, options trading. We go all over this, all over the different major types of trading styles in our community. We like to consider ourselves basically like a one-stop trading shop within the trading world. So come and join us. And if you like this video, we would greatly appreciate it if you give it a thumbs up, subscribe to our channel, and share it out on social media. So hopefully this video of probability of profit versus touch helped you, and we will see you in our community.